Hi, welcome to Fastmarkets Asian Aluminum webcast. I'm Jingtai Lun. I'm Fastmarkets Asian non-ferrous editor. In our 150-year history, Fastmarkets has been serving the metals, forest product, and agriculture industries by offering pricing, and insight. As a critical metal, aluminum plays an important role in industries such as automotive and construction. So in today's webcast, my colleagues, experienced press reporters, and analysts are going to share with you their insight in the East Asia and the rest of the world. So on today's agenda, my colleague Chay Chye Leng is going to talk about the low carbon aluminum market in Japan and South Korea, as well as the demand and fundamentals there. This will be followed by a presentation from my colleague Ruby Liu about Chinese aluminum market review and green power aluminum. And then our analyst Andy Farida is going to talk through aluminum price outlook. But before we start with today's agenda, I would like to draw your attention to our recently published low carbon aluminum differential for Japan and South Korea market. We launched this price to provide pricing transparency for this emerging market, as we have seen inflow of low carbon aluminum to the Japan and South Korea. So my colleague Chay Chye Leng is going to talk more details about this market. So with that, I'm going to pass it on to my colleague Chay Chye.
Thank you, Jingtai. I will first speak on the aluminum market in Japan and South Korea before speaking on the low carbon aluminum interest that is growing in East Asia. From this graph, you can see that the spot and quarterly MJP premiums have been moving in a similar trend. Now, firstly, some background information. March is the end of the financial year in Japan, and participants are keen to keep their stocks low in Q1 before restocking in Q2. Secondly, the rise in premiums in Q2 2023 coincided with China's reopening, where there was strong belief that China's reopening would boost the demand for aluminium. However, expectations fell short of the reality, and premiums slowly faded in Q3 and Q4. In the fourth quarter, premiums fell drastically amid the weakening yen, as well as sustained weak demand from the building and construction sector. However, the automotive sector was mixed. The automotive sector has been recovering after the global chip shortage has been eased. However, the recovery in the automotive sector was insufficient to cover up for the loss that was contributed from the other sectors. Meanwhile, inventory levels in the main Japanese ports remained high and stayed above 300,000 tons each month. In 2023, the ample supply and weak demand kept downside pressure on the premiums in Japan. Entering into 2024, the Chinese arbitrage opened briefly, and this led to import opportunities and units from Asia being moved towards China, and this created a tighter market in Japan. Furthermore, the white contango allowed participants to hold on to units. Elsewhere, outside of Japan, premiums were also rising, and this provided further support for premiums to rise in Q1 2024. At the point of this recording, Q2 negotiations are still underway, with buyers and sellers diverged on the market, but it is increasingly likely that Q1 premiums would settle at least 61% over the Q1 MJP settled level. Moving on to the automotive sector in Japan, we see that the automotive sector has been weak, especially since COVID hit. However, in 2023, we saw that the automotive sector has been improving, and it has improved by 14% compared to 2023, and this is largely due to the easing global chip shortage that affected the world when COVID hit. However, despite the improvement in the automotive sector, it remains 7% weaker compared to 2019. Next, moving on to the construction sector. The construction sector has been weak, and it has been attributed to the declining population and lower needs for new residential buildings. Building starts have fallen at 7% in 2023 and 13% when compared to 2019. Next, looking at the imports of unrolled and unalloyed aluminium into Japan, we can see that in 2023, the imports of aluminium into Japan fell quite significantly. This is due to the high supply and weak demand in Japan. If we look closer, we can see that Russian units that were entering into Japan fell quite drastically in 2023 as well. Although Japan did not introduce any new sanctions against Russia after the Russian war with Ukraine, we saw that many participants in Japan began to self-sanction and shun Russian metal. The changes were more significant in 2023 compared to 2022, when Russia started its war with Ukraine, as most participants were already on long-term contracts in 2022, and they continued to accept Russian metal in that year. Next, moving on to the main Korean port premiums, we see that the premiums in South Korea moved in a similar trend to the MJP. The automotive sector, likewise in South Korea, is also one of the main contributors to demand in the aluminium market. And the automotive sector has improved 12% in 2023 compared to 2022. This is also due to the global chip shortage having eased in 2023, but furthermore, there was strong demand for electric vehicles globally, and this has helped boost the production in South Korea. Next, looking at the imports of aluminium into South Korea, it remained stable in the past few years. However, as we can see, the Russian imports into South Korea improved quite significantly in 2023. This is likely due to Gwangyang emerging as a hub for storing LME aluminium, and we understand that 91% of aluminium on the LME is of Russian origin as of end February. Next, let's look at the low-carbon aluminium market in East Asia. As the world moves towards decarbonization and goals set to reduce carbon emissions by 45% in 2023 and net zero by 2050, the aluminium sector has been heavily scrutinized as it emits about 3% of the total direct carbon emissions in industrial production. Many of the smelters that produce primary metal using hydropower have gone through external audits to have their output certified as low carbon or green. While low carbon aluminium has not yet been defined formally, the 4 tons of carbon emissions or equivalent per ton of aluminium produced is generally taken as a common reference point. We have seen producers and downstream participants are moving in line with all these decarbonization goals, and producers have extended their range of products to include low-carbon aluminium, and the downstream participants have been more receptive to taking low-carbon units, especially in the automotive sector, which has been at the forefront of this movement. In response to the development in the low-carbon aluminium space, Fastmarkets launched multiple low-carbon differentials in various regions, example US and Europe, and most recently, in March, we released a low-carbon differential in East Asia. The interest in low-carbon aluminium in East Asia has been growing, particularly in the automotive sector, whereas the construction sector remains lacking in interest. The EU's implementation of the carbon border adjustment mechanism to combat carbon leakage has sparked interest in low-carbon aluminium among market participants in Asia, particularly those involved in exporting to the EU. However, it is understood that there has been mixed responses when a low-carbon upcharge has been proposed to downstream participants, despite their increased inquiries. The difficulty in passing on this premium to the end user has left some unwilling to move towards low-carbon aluminium. Furthermore, price remains the main point for participants in the region. Fastmarkets continues to pursue and seek transparency in the developing low-carbon aluminium space and in broadening its coverage of this material. With that, I'll pass the time to my colleague Ruby.
In the following slides, I'd like to give a brief review of China import market for aluminium and also a brief introduction about the green power aluminium in China. At present, we access the two premiums, CIF Shanghai and Bond in Warehouse Shanghai for the premium market, and we access the premiums once a month. Fastmarkets has proposed to amend the pricing frequency of these two assessments to fortnightly. So if you have any questions, comments, or suggestions, please reach out to me. The consultation period will end on April 16 and take effect from Tuesday, April 23rd based on market feedback. In this slide, the graph shows the overall trend of the China aluminum premiums. So we can see that the aluminum premiums have trended up in the past 1 year, despite a plunge in October. The price fall in October was mainly occurred when the import arbitrage window was closed, and also the cargo holders were eager to sell the metals as the year end approached. However, at that time, some participants said that they expected the premiums will go up soon. There are several reasons that could explain the overall uptrend for the premiums. One is that the improved import arbitrage underpins the higher premiums, and we will explain it later in the next slide. And also, most of the time, the import arbitrage window is closed. However, the higher premiums in other Asian countries like Japan and South Korea will support Chinese premiums, because the cargo holders can choose to sell the metals to those nearby countries for higher premiums instead of cut offers to Chinese buyers. And finally, China is a net importing country for aluminium, and its demand for this light metal shows resilience. In this graph, the red line is the aluminum import arbitrage, and the blue one is the CIF Shanghai premium. And we can say that the up and downs of premiums are almost in line with the import arbitrage, though most of the time the import arbitrage was below zero, but it improves gradually from minus $300 in the beginning of last year to almost minus $100 at present. The aluminum import was particularly active in late August and September of 2023 and December and early January of 2024, when the import arbitrage window is open. Those graphs show the import and export of China's aluminum, and we can notice that China's import of this metal increased significantly in the past 5 years, from just 75,000 tons in 2019 to more than 1.5 million tons in 2021 and 2023. There is a sharp import decline in 2022 because of the large domestic output and the depressed domestic consumption amid COVID-19. At that year, many Chinese cities were under pandemic lockdown. The orange part shows the import from Russia. So Russian aluminum dominated China's import since 2022 because Russia was sanctioned by the Western countries due to the Russia-Ukraine war that year. And many international countries become very cautious to trade Russian materials. Compared with the import, China's export of the aluminum is very small. That means most of the imported metal and the aluminum produced are all consumed domestically. This graph shows the supply and the consumption balance. From this picture, we can notice that
the aluminum supply and demand are in a tight balance in the past 5 years, and both the supply and demand are gradually increasing. China's domestic established capacity for aluminum was around 45 million tonnage at the end of 2023, almost very close to the cap of 45.43 million tonnage. That means with the potential increasing demand, China has to source the materials from overseas market. So where do the aluminum go? Despite downturns in the traditional construction sector, China's demand for aluminum in the past year actually increased a lot because of the emerging energy transition sectors, particularly from the NEV and the solar energy sector. So in the past 5 years, we noticed that the building industry has been softening, and the new study area fell to just around 4 billion square meters in 2023 compared with about 5 billion square meters 5 years ago. In contrast, we noticed a significant increase from the NEV and the solar power sectors. The NEVs drive up development of lightweight vehicles, which needs more usage of aluminum, and China's output of NEVs reached 9.44 million units in 2023, almost a 7-fold rise from 5 years ago. And also, China geared up its installation of the PV sector in 2023 with a total new capacity of 216.88 gigawatts. And up to now, this year, many participants told us that they continue to see an increasing orders from the solar energy sector, and they believe that the solar energy sector has become one of the pillar downstream sector to support the aluminum industry. Finally, I'd like to give a brief introduction about the green power aluminum in China. By definition, green power aluminum refers to the metal including both liquid and ingot produced using green power, which refers to wind, solar, hydro, and all other forms of renewable energy. China has geared up its development in this sector in recent years, and in the spring of last year, a guide to green power aluminum assessments and transactions took force. And since then, the China Green Metal Certification Center started to issue certificates to qualified aluminum smelters. By the end of last year, 51 certificates were issued, and more than 2.6 million tons of aluminum are recognized as green power aluminum. Because most renewable energy in China are located in the northwestern and the southwestern part of the country, that most capacities for green power aluminum are located in those regions, including provinces of Yunnan, Sichuan, Inner Mongolia, Qinghai, and Gansu. This picture is an example of the certificate. So in this certificate, it pointed out that the indirect emissions usually refers to the scope 2 carbon emission should be 0 for the green power aluminum. Next, let's welcome our analyst Andy to present his outlook for the aluminum market.
Thank you, Ruby and Chay Chye. Now that we have an overview of the Asian aluminum market, my aim today is to look more into the price outlook for aluminum for the rest of the year. What are the risks and opportunities that are out there? So in the slide that you will be looking at, here are the overall bias on the LME base metals complex that we have produced back in November of 2023. One thing to point out is nothing here is obviously set in stone, but these are just a bias where how we see the price action will move, and obviously these are based on the proprietary input that Fastmarkets research team has produced. However, the bias can do change, although they are very seldom. We very seldomly change them, but obviously this is to take into account of any changes on the macro dynamics or even the metal's fundamental backdrop. It's obviously in hindsight it looks much easier to say that, hey, we called the Q1 bias, where we think that prices could dip and then recover That's why we have the green arrow going up, that going higher. But for Q2, we think that some of that bullish momentum that we have seen on the base metal prices to continue in the first half of Q2, with a potential risk of stalling potentially midway in May and June. And we do have a slightly more bearish downside view in Q3 and Q4. This can be explained in our next slide, where we break down all of the other three key points. Chay Chye, if you want to move to the next slide, please. Yeah, so here we go. So in Q1, we think that there's a robust growth out of China. From our own view, is that the whole world seems to underestimate what China can deliver. But so far the beleaguered real estate sector continues to stabilize. The Chinese authorities are very keen to cut interest rate and continue to support the economy from a fiscal and monetary stimulus point of view. So far, China is doing rather well to curb any of the headwinds that could potentially drag its economy down. In Q2, that's where we think that prices could start to diverge, where we think that the overall bias is, we think that prices or the upside momentum could stall. But again, our bias could change if the macro situation changes. But so far, with the US Federal Reserve delaying the rate cut expectation initially from a potential March rate cut to a June rate cut, or even now the June rate cut has a low probability of 50%. So market could potentially throw a tantrum in the next coming weeks or months, but we will have to see if the overall bias continue to play out. Why we are bullish on China? We do think that the two session has given us a fair amount of evidence that a large stimulus bazooka is not the sort of policy that Mr. Xi Jinping will deploy. However, the mandate is that setting a rather high 5% GDP target for this year is giving market participants just enough hope to say that more stimulus will come to support the overall economy, and that obviously provide the buffer for the overall demand outlook on risk asset like the base metals. We are bullish China. We think that China could stand out to outperform the other Western economies. Where we are more worried is within the Western economies in Europe, where economic growth are stagnating due to cost of living crisis, ongoing high interest rate environment. On a similar vein, we do think that the US economy could potentially tilt into a mild slowdown if unemployment starts to tick up. And then there's also the fact that being in 2024 being a election year in the US, that brings in much more volatility. So Chay Chye, if you want to move to the next slide. This volatility, as we know it, is whether the US citizens are going to choose the incumbent, Mr. President Joe Biden, or the previous president, being Mr. Donald Trump. We've known how ex-President Trump, when he presided, there has been a lot of global tit for tat between the US and China. It's not particularly good for geopolitical situation. However, if we recall, during the Trump era as a president, he's very much inward looking, and he's trying to bring back jobs. He's trying to bring back certain key industries. So, in the short term, it looks good for domestic companies, but outside the US, there could be more tensions. There could be more uncertainty. However, if Mr. President Trump, from previous historical data, suggests that he could bring oil prices down, then that could have other ramification for the overall outlook on base metal prices as well as premiums. But we will certainly discuss that further once we know who will win the U.S. election comes November of 2024. Um, so now that we've covered more or less the macro risk and opportunities, this is just a short summary of how we see things going into 2024. We are bullish in the first half of this year, so bullish Q1 going into Q2, where we think that prices could stall. Our main worry is more into the second half of this year, where we think that election jitters and uncertainty could start to affect risk on appetite, and that could potentially cause a drag on prices. Again, we have to stress that nothing here is set in stone. We are worried in the second half that prices could comes under pressure, and potentially retest the 2023 low or even go beyond below the $2,000 per ton level. But we will revisit this in our next quarterly update. So just to review what has happened in early in Q1, we've seen that aluminum has been the worst laggard compared to the other base metals. It obviously underperformed, despite the fact that there has been a few supply disruptions from on the bauxite and the alumina side of things, but that did not translate into stronger prices back when we were collecting the data. However, we make the argument that the aluminum price needs to play catch up with the rest of its peers, and so far we are seeing a much stronger price action. And at the time of this recording, aluminum was actually trading near the 2400 level, so 2375 area. So far it is reacting positively, given how the rest of its complex are doing really well. So that is a positive. So it has reacted well to our overall Q1 buyers. But going forward, we will showcase our why we are slightly worried coming into the second half of the year. Can we move to the next slide, please? So here is a monthly aluminum chart. Visually, it's meant to be descriptive, to be easily digested. One of the things that we want to point out from the monthly chart is the downside risk, where from a historical price action, every new all-time high that aluminium has created. So, for example, we want to point you to the 2006-2008 new all-time high. It created what we call, from a technical point of view, a bearish double top. A new all-time high, and then prices come back down to the long-term uptrend line, which is in this case the blue uptrend line, and that blue uptrend line is the 1993 low. If you see from the chart itself, having tagged the long-term uptrend line, that is where the aluminum price can produce a more sustainable rally to the upside. So a new all-time high, followed then by attack on the long-term uptrend channel. We have a similar price structure where we have a new all-time high back in March 2022. We haven't exactly tagged the uptrend, the bottom uptrend line, so that could potentially act as a drag or as magnet over the coming years. That could see that aluminum price needs to potentially reset itself down to the uptrend channel line before it can start to produce a much stronger rebound rally. Right now we are at a halfway point where prices are just consolidating, but we are monitoring the overall situation to see how the aluminum price is reacting. But this is where we derive the fact that the upside potential for aluminum could well be limited, while the downside risk is very much stronger compared to the upside. So on the weekly chart, this is obviously a little bit out of date, but we share this with our subscribers that our overall bias for Q1 is to be bullish on aluminium. And so far, if we follow the ABCDE price pattern, that has played out. Right now, we are actually trading at E, where we have the pink arrow where the 100 weekly moving average crossed the 200 weekly moving average. So right now, the price is actually trading right there. We could certainly update the chart. We have updated the chart for our subscribers. We will monitor the situation of how aluminum price reacts. But our overall view is that a lot of the upside move has emerged. This is where we are entering into the Q2 period, where potential stall in terms of the upside momentum could emerge. And we will look for confirmation if the overall bearish price structure could continue to play out potentially similar to the 2013 scenario. But this is again, we'll wait for further confirmation. To complement our bearish view, not only from the LME, but we also look at the SHFE active aluminum contract. Granted, the overall price action is still moving in an upward channel, but again, we have to stress that every time it touches the upper channel, it comes back down to retest the lower channel trend line. So this is something again that stress the aluminium is consolidating. We are midway through the whole process, and our overall view is that the price action is taking its time to consolidate before potentially more downside can emerge. This is obviously an old monthly chart which we produced back in November. The next slide will show you the latest aluminum monthly chart on the SHFE aluminum active contract, where overall we haven't really gone much on the upside, and instead we think that it is still culminating some power for a potential bear flag formation to play out. If we were to apply some basic technical structure, we see the distance from AB is equal to CD, then it could potentially drag the SHFE aluminum price low to a new confluence support level where it could produce another higher low. So that sums up our view for the year. We were bullish in Q1. We think Q2, that's where some of the bullish momentum could rub off and starts to stall. We are more worried into in the second half of the year. The reason why we think that that could ensue is potentially due to the election cheaters in the US. However, what we have to take away here is that Fastmarket introducing the low carbon differential for Asia is to get a better picture of where things are going. What we have to understand, obviously, low carbon aluminum remains the future, and it remains part of the huge mega trend that for the whole economy to achieve a more circular economy. So I hope that helps. Any questions, do feel free to let us know.
Thank you all for your excellent presentations. I hope you found it helpful. And last but not least, you're welcome to join us in Fastmarkets Bauxite and Aluminum Conference, which will be held in April in Miami. And also, we'll be holding a conference about aluminum, which will be in September. And you're welcome to join us in this conference as well. So this will bring us to an end of today's webcast. If you have any questions or if you are willing to become a credit submitters, just feel free to contact us by email. So thank you.